Good morning. I'm going to try. I think I'm live. Current live stream. There we go. Okay. I'm on KOLD. Let me switch over to Safari View. Show you that TrendSpider is still. It is on sale. And I might have to let the dog out. I don't know if I hear her or not, but I might have to let her out. $468. You want the elite version. So let's get over to our scans. That's what I'm hearing. I'm hearing my voice. Hit the thumbs up because it does help. I have to turn on my do not disturb. And anybody watching football last night, that poor guy. I was up late last night. That's why I'm up slightly late in getting on. Later than I wanted, I should say. Just because, I was up praying for that little dude and his teammates. They did the right thing in stopping it. QCLN cross up. If you have TrendSpider, you probably can take a look at this. I got to start my, we're going to remove that, move to trash. I got to clean up my desktop later today too. Okay, why is the scan taking so long? If you didn't know, I did my first fire broadcast last night. I'm going to turn down the volume. Okay, let's see. Compressed vocal. I think this is the volume we're going to turn down. Yeah. I did my first fire broadcast last night. I wasn't too impressed. But the goal is not to impress me. And now, this is interesting. Current candle. Brokerage holdings. Let's do brokerage holdings. Morgan Stanley. Why is Apple not showing up? Core investments. That's interesting. Is it because... Hold on, I gotta go over to the strategy tester. Run. Apple had a cross up at... I'm going to say Apple. I don't know why it's not crossing up, but it had a cross up at 128. Ironic, I sold at 130. For quite a profit, I should say. I'm not complaining, but I think my average purchase price was $5 or something of that sort. Let's see, low cost ETFs, the Vanguard funds, anything on this one cross up. We have to redo the DRVN. Nothing on our low cost ETFs. Let's look at sectors. Nothing on that one. Let's look at my personal watch list, which I haven't shared. This is Teladoc, ARCG, MGM, Datadog, and Penn National. Oof. Penn National cross up. Nice. Okay. 11 symbols not scanned. Checkpoint. I don't like that. 3M. Has 3M been beaten up enough? Let's go back to a weekly. Morning, James. You are back to... This is what's crazy. This is 3M, and you were trading at 175 pre-pandemic. you have more people using masks. You have more people using everything, but they're at 119. And look at how far down that. I mean, you're well below where you were during the pandemic. Huh. That's an interesting one. But they have significant lawsuits against them. There's a lot of things that kind of changed in mode. That's an interesting one, but don't like it. You know, I'm going to bring up report about Chat GPT threat listed as code red internally. So if you haven't read, you can Google it, but or Chat GPT it, whatever you want, but Chat GPT isn't up to date. Google supposedly over the last few weeks has been in a code red based on the threat from Chat GPT. And so if you look at Google's revenue stream, the vast majority of their revenues comes from their search. And ChatGPT, while it isn't there because it's only should I put 3M down? I'll put 3M down. ChatGPT is only, I think it's only indexed up till 2020 or something like that. It's not indexed up to the current year. So you can't use it for like stock market stuff. You can't use it for a lot of that stuff. But Dexcom, IDXX, Global Foundries, they're in a code. Google's in a code red because they fear that the next iteration of ChatGPT could significantly affect their search revenues, which is what the company is based on, and which I completely, I would tend to agree that they should be nervous. But it does, it affects us as traders because, good morning, Dawson. If Google is, again, let's go to FinViz and let's look. Google's PE is somewhere around 17.16. If their earnings per share are expected to go down, that PE could be brought down because 17 is considered kind of average. But if they're just going to continue and they're not necessarily going to grow, big tech will have a big year. Yeah. I don't see the ChatGPT kind of thing, but it's funny. Credit Suisse was the last one to put out a price target down to 134, and you're at 88. Look at the buys, November. Member of the 10% group. They bought at $34 a share. It's insider. They're allowed to do that. The last three are sales. And Mather Director, sale 89, value, it's only $39,000. Look at those big buys, though. I'm going to do a seasonality of SPY. If you guys have TrendSpider, by the way, here, maybe I'll teach you something. And you can't see the full screen. But go with me on if you're on TrendSpider. Pull up SPY. And then you're going to go to, in the right-hand corner, the right-hand kind of sidebar. If you go up to what is it? I think it's God, how do you get this? Oh, how do I get this stuff? I think you go account and settings. No, we don't want that. Duh. In the upper right-hand portion, there's a sidebar. So if you guys have, I think Dawson, you've got it. If you're on TrendSpider, go to the sidebar, and you can add or remove widgets. And there is a seasonality, which I like. I have watch list, I have my alerts, I have seasonality, and I have insider trading. And so if you pull up the SPY and you just go to seasonality, and you can expand that widget, and we're going to go monthly, and we're going to go all the way back to January 1993. So that is what, 20, 30 years? 20 years. No, 30 years. 30 years. Not good at math this early in the morning. 55% chance January is positive. So, wasn't positive. Last year, I think we hit our high on this January 3rd, the first trading day. So, but yeah, seasonality, I like it. I like it because it kind of puts that into perspective. Now you can go week of the year, and you can go all the way back to 2003, which is 20 years. And this first week of the year, 63% chance we're going to be positive. Next week, 63% chance. The following week, 37% chance. Most of this 63 probably has to do with some type of, hey, we got a lot of tax loss harvesting. You usually have some pretty good volume in the first couple of weeks of the year. But it's interesting. I like it. Okay, let's go to, we did that. Let's do the energy sector. I got Morgan Stanley in there already. Boom, 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 S&P. We're going to do energy. PVL. Permavillion. Jim Cramer's on. I was on a Cramer rant last night. Fucker probably had that Buffalo Bills on his fantasy team. That's why the kid got hurt. It's all Kramer's fault. Too soon. NVVE. I don't like any of these energy plays. We're going to look at our standard energy plays. Let me find my energy list. I know it's up here. God, I'm looking at all the ones that I sold. Actually, I want to look at REI as well. But I want to talk more about well, I think that's everything. Devon Energy. Let's go back to Strategy Tester. By the way, if anybody has I had a screw up. KOLD is crazy. I showed that on Active Trader Pro here. It's because of a warm winter, James, in Europe. Essentially, some of Europe, they're in the 60s at night in Europe. Unusually warm weather. By the way, Futu is down. Big. Why are they looking at this? It's It's 9:05. It's not even time to ring the bell. I'll look at REI. KOLD is just nuts. I'll move that down there. I'm trying a different. You know what? I don't need to stop streaming and all of that stuff. Let's look at REI. By the way, I have this new little view. Boom! I can make myself bigger. Let me see. Yeah, boom. Let's look at REI. I decided I'm going to have some fun before recording the podcast. So REI still got some confirmation here. I mean, here's the thing that you have to look at with REI. It covered this gap on the way down. I think that 245, like you said, that shelf, I think that's probably some type of resistance. You can see it beat here. Let's blow this one up a little bit. So we go from here and we just cross and look. You got 1, 2, 3, 4 lines that hit it. And so it's definitely some type of resistance level. If we pull back the volume shelf on REI, maybe I won't go over it on the podcast because most of you people, I'll bring it up. But you need to look at the chart on this one because look at the volume shelf. I mean, again, yeah, I think you're right in this one in that if we break through, the danger is from a volume perspective, you've got 245 as a support level, but it's providing significant resistance. So my guess is I think you're right in that if it breaks through here, I think we do see some movement up. But look at this is what worries me is you look at this RSI at 21 here on December 9th, and we've steadily climbed, and we're at 57 right now, and your MACD is moving up. Move back to December 9th, and you were at about 221. That's a 10% move up to this 240, almost a 10% move to the 240. But with that steep MACD, I mean, look at this move from the MACD. Look at that steep move on the MACD. And then look at this. You were at $2.81, and you kind of just floated around, but you went to $3.40. So, yeah, oil's getting, I mean, again, it's kind of, they're assuming Putin isn't winning this war. And that, China is still in shutdown. I should bring up Coke too. Excuse me. Coke and Pepsi. So if you missed it, Bill Ackman came out with Coke and Pepsi and said, wow, man, there were a lot of scans. That was what, Friday? Thursday. Did I not do a show on Friday? Maybe it was Friday that I did. I didn't do one on Thursday. Okay. I think I'm going to start recording now. Let me just get over to boom. Just a reminder, TrendSpider, if you're not on it, there's a link below. You can sign up for it. I'll give you access to my algorithm, custom watch lists, and my scan that I use every morning. That's what I was just doing is scanning. for the markets for. Let's look at opportunities. Oh, you know what I wanted to look at? Let me go back to Active Trader Pro, because one that this is 100% a trade. It is nothing more than a trade, but Mullen is up at 32 from 24. They had some crazy thing happen over the weekend or something. News. This is all just kind of rumor, speculation. It's a trade. It's not anything more than that. Because this company will not make money. But let's go over. Let me move back over to Safari. And let's see what the news is on Mullen. See, they don't even have any news here. It's all on Twitter, I think. I'm going to move to Daily Stock Pick. And we're going to do a search for Mullen. $68 tweets in the last hour. Let's see. It's a short squeeze. That's what it is. Let me see. 11% short. Yeah. Total 100% short squeeze. See, this is the problem that I have, and they're not even going to make these things. These are just renderings. That's all Mullen is. It's a rendering. So, yeah. We'll go back to good news. Amazon's up. Let me look at Amazon chart. Ooh, they had a buy. I'm going to put that in. Scan. Because I have to fight with Amazon on a delivery that I canceled, and they're still delivering, and they're saying can't be returned. But I learned a trick, by the way, insider info. I interviewed with Amazon to be part of their TV team. This was in 2009, 2010. It was right around the time when Amazon bought Whole Foods. So essentially what happened was I had a friend who worked for a programmer, I think it was Bravo or one of those things, and he called me and he said, "Hey, I've got a buddy who's heading up a new initiative with Amazon. They are starting a TV subscription service, and it's kind of on the QT, and they want somebody who understands TV subscriptions, has worked in the business, blah, 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 can start the marketing, the selling." It wasn't like a CMO kind of thing. It was, product manager, like, hey, let's look at the features and benefits. Let's throw these out there. Let's start developing this, and this. And I was working for Earthlink, and I said, yeah, let's go ahead and talk about it. And I reached out to the person, and I talked with the person at Amazon. I talked with about 4 people. I think I had 4 or 5 rounds. And we were stuck on, I didn't want to move to Seattle. I just didn't. I didn't care how much they paid me. I didn't care anything. I just didn't want to move to Seattle. It was kind of gray and gloomy for me. So they said, you'd have an office right down the hallway from Jeff Bezos. This is his #1 initiative, blah, blah, blah. I mean, it was a pretty big deal, especially for, like, listen, I'm nobody. I'm a middle manager at best. I'm not in charge of anything. I never was in charge of a whole lot of things. I had some great ideas, I thought, and put together some great initiatives, but yeah, they were like, you're going to be with Jeff Bezos, and this is his number one initiative. And I went, and I think it was, and all of this happened over a 4-day period. So I was getting ready to fly out there to do the first in-person interview. I had done 4 or 5 phone and video chat interviews because I didn't want to fly. They didn't want to fly me. And so this was going to be kind of the make or break. Let me see what Seattle's like, because they did want me to move, but I was pretty much going to tell them, no, I'm not going to do it. And it was a Friday, and I get an email from the person at Amazon, and he said, hey, there's going to be some news hit in about an hour. He goes, let me email you after the news, but don't plan on flying out next week. I said, okay. So the news was that he was actually leaving Amazon, and that Apple had hired him to head up their video service. And so I was like, whoa, I guess maybe it's not that great. And then I think within like a couple days or that day, it was announced that Amazon was buying Whole Foods. And then I followed up the next week, couldn't get a lot of news out of Amazon. They just said, we've changed direction. And I emailed the guy at Apple and didn't get much leverage there. So kind of went nowhere. But it was interesting. And they still don't have a TV service. Amazon Prime is not what they were looking to do. Amazon Prime was already in the works. It was well out there. This was a YouTube TV, a Sling TV, a Hulu Live kind of subscription model that they were looking to do. So, interesting stuff. But I still like Bank of America. How's our Wells Fargo doing? 41.30. Still up there. The markets just capitulate. I mean, look at the financials are just sitting there. Goldman Sachs is up 1%. Google's up 1% pre-market. Oil's going down. Snowflake's up. Shopify's up. Shop at 34.32. Can you get back to 37? Let's look at that one. We'll look at that. It's expensive. Taiwan Semi, has that come down enough? No. We'll put it in a scan. I got a lot. I mean, there's a lot of stocks here to go over. Okay, you know what? Shit or get off the part. Morning, Justin. Okay, let's do the podcast. Good morning. It's Tuesday, January 3rd. And I did my first fire podcast. Wasn't too happy with it, but it's a first. It's just, how do you find your fire number? I'll link it down in the description of the podcast if you want to listen to it. It's just, I'm going to take you step by step fire. You know, once a week, I'll kind of pick a topic or a fire feature, and we'll kind of go over it. If you have anything that you want me to go over, write to me on that one. That's the first announcement. Second announcement is that TrendSpider is still on sale. It's 40% off for the Elite. $468 for the year, $39 a month. Again, if I can't make you $39 a month, you're crazy. Links are down in the description. I'll give you my access to my algorithm, give you access to the watch lists, the core portfolio that I have, everything, all the tools that I use in TrendSpider, you'll get. So hopefully you guys sign up. You don't need it. Again, if you're not trading more than, if you're trading once a week, I think it helps. If you're trading once a month, don't get it. I don't want to lead you down a path that, it's a waste of money. But if you're trading stocks more than once a week, There's no reason not to get this. The alerts are too good. The actual service, the texting, the email, all of the services that they provide. And it's way deeper than even what I use. Some of their indicators and their custom tools, it's just phenomenal. And if you're not sure if you want it, go to TrendSpider University on YouTube and just look at all of the features that they have. For, again, $429, is it, per month? $468 for the year. You get to write it off on your taxes too. So let's start off new year, new you. How many people have said that? And by the way, I got up late this morning because I was up late last night. Prayers to that dude Damon in Buffalo. Anybody watching that game last night? It was pivotal for my fantasy league, but it was clear. Fantasy leagues and football was far from anyone's mind when that happened. I heard he's unconscious still, in critical condition, but he's alive. I mean, and that's way better than I think a lot of the prognosis was immediately after that. But yeah, I'm in the fantasy football finals, and I have Joe Burrow, and my opponent has Josh Allen. So we were tuned in pretty intently last night. So I was up late. Let's look at SPY. And what I just did on YouTube with some of the folks on YouTube is we were looking at SPY, and we were looking at some of the seasonality of SPY. And what TrendSpider allows you to do is look at the seasonality of this. And so we looked at the weekly SPY. And if you go back 20 years to 2003, 11/3/2003, this first week of January, 63% chance of a positive outcome, meaning that you start the week off lower and you end it higher. Next week, 63%. The week after that, only 37%. And the week after that, 53%. You go out to week 7 and you're at 84%. Not sure exactly why that is, but it's probably got to do with some type of Fed meeting or some economic reading that comes out during that time, because we have been in a bull run since then. But you look at SPY, and on December 29th, we had a cross up here at 383. I don't think there's any reason why this one holds on to this. You can see the 50-day is coming down, down towards the 200-day. You might get a death cross here in the next few days. I think that probably today you're going to see a positive outcome. And I said this, the reason is because there were a lot of people like me who in December sold a bunch of shit to try and make up for, just take the tax loss harvest. And we sold everything that we could against some gains that we had. And again, I'm 52 years old. You guys that are younger have to realize the fortune is made with buy and hold. And so some of the trades that I held on to too long, I was able to take those long-term capital gains and write them off against some of the losses that I had. Again, you have to hold these things for more than a year for long-term to write off against long-term. Your short-term can't be written off against long-term. You can only take, I think it's $3,000 in short-term is the max. I'm taking that. I've gotten that. It's kind of, not to get political, but if you look at Donald Trump's taxes, that's how he doesn't pay taxes. He just declares losses. I mean, the guy has declared bankruptcy more than anybody in the U.S. that I'm aware of. He has failed, growing up in New Jersey. It's not breaking news. The guy failed Atlantic City. I mean, he had a bunch of casinos in Atlantic City. He's able to write those real estate losses off for years to come. So against his current businesses that are doing well. So, hey, kudos to him. He's able to take care of that. But that's what tax loss harvesting is. You take your long-term capital gains and you write it off against the short-term. So when you do have these down cycles, at least you're able to take some type of advantage, reallocate that money to actually sectors that are winning, and basically start over from scratch. So I didn't sell out of everything. I've got 6 figures on the table. I'm going to be redeploying that. I am also going to be trading in my Webull account. I know I didn't do it over the December, like I said, and I would do a charity donation. I'll do it here. I had some tax, again, I'm very focused on taxes, if you guys can't tell. You can make your money in taxes just as much as you can make it in the market. So I was focused on taxes, but I think my current Webull account with the stocks that they gave me, it's like $1,040. So I made $40 in a month. They gave me a bunch of stock. So I wanted to take a look at that SPY seasonality. And again, if you look at the weekly, if we change this weekly to monthly, you can see monthly going all the way back to 1993. SPY was up 55% of the time in January, 57% of the time in February, 60% of the time in March, 77% of the time in April. This didn't hold true last year. I think we were down in pretty much every month for SPY. Let's take a look at a monthly. Let's move back and we'll take a look at a monthly chart. You can see January 2022, down, down, down. The only green candle was March. And then you down. And then we had a green candle in May. We had a red candle, big red candle in June. Green candle in July. Doesn't mean that you finished higher than the previous month, just means that you finished higher than when you're opened during the month. So, yeah, there's your SPY kind of look at things. Stephanie Link put out a great note from Morgan Stanley on input costs coming down in the restaurant industry. Commodity index was up 7% year over year. In Q4, it was up 11% year over year. In Q3, it improved 2% sequentially. In addition, it shows sequential improvement each week through December. Key theme for 2023 across the board is that the restaurant industry should start to come down. She's bullish on McDonald's. Let's take a look at McDonald's stock chart. You can see McDonald's stock chart. You're down here. It got you out. You're kind of playing against the 200-day, and you've got this this gap down here at 259. You're starting to fill it. You know, have your earnings coming out on January 25th. This is an expensive stock. You're running up against 52-week highs on this one. So it's probably not a huge one, but if you wanted to put it into a core portfolio, you could do it. I saw a video, and I put this one out on Instagram, I think, of the first employee-less counter of McDonald's, meaning that your drive-through and your counter do not have employees giving you anything. They don't have you taking their orders. They don't have you doing anything. It's in Dallas. So if that's not the beginning of the employment, hey, we have an employment problem, I don't know what is. But Darden Restaurants, we had a buy-in here at 139.41. You're at 138. Doesn't have confirmation. Excuse me. And I'm going to edit. Hopefully I don't have to edit this stuff out, but you have no confirmation on this one. My guess is that 135 is probably going to be where it stops. It's going to use that 200-day as its support. It's got its dividend X date coming up here on January 9th. And she also mentioned Starbucks, which I think Starbucks, probably a decent one. What worries me about Starbucks is you don't have confirmation. You do have this $99.41, but I am still worried about this $89 to $85 gap that was caused on their last earnings. You have a volume shelf kind of clearing up down there. Let's pull it back here. The volume really, if you break this $96, your next shelf is right at about the 200-day at $92. So I'd probably wait to get into Starbucks. No rush to get in there. One that is going nuts right now is KOLD. KOLD in pre-market, I think it's up about 20%. Let's look. KOLD closed at 27. It's at 31, so it's up 10%. Warm winters. European warm winter. And I'll show you the chart in Active Trader Pro. Just look at the pre-market in light gray. Essentially, it's warm. It's warm winters, and it's the Vladimir Putin's worst nightmare is a warm winter. So KOLD on the algorithm, you're still in this one. It's got gaps all the way down. If you're not in this, I don't know that I necessarily get into this. Look at the RSI is at 80. Your MACD is way up. But I will tell you, it doesn't mean that it's time to get into Boyle. Boyle is going to continue to crash. Boyle is down here at about 1580 right now, and you've got gaps all the way up. At some point in time, Boyle makes sense to get into. Just probably not right now. Look at the weekly of Boyle. And remember I drew that trend line, and the trend line's still up on my screen. And that trend line shows, if you just go back to 2018, this is November 2018 right there. If you just go back and you touch 3 points with the trend line, essentially is down here in September, and you say in March of 2021, when Boyle and Ukraine started being invaded and natural gas really started to rise, and you see that rise there. Well, if you just continued the trend, you're down on Boyle at $2. And remember how these work. These do reverse splits to basically prop up the price. Doesn't mean that it would be at $2. But look at how the volume. The volume on Boyle in the past few weeks, just since December, it's flown. But it's completely on the negative side. So there's a bunch of sales out there that are really kind of pushing this one down. So do not expect this one to continue to all of a sudden make a big move back. You might be able to trade it intraday for the big moves in KOLD and things, but I would not expect this one to move back. They're talking about 60 degrees at night in Europe in freaking January. So Tesla announced their deliveries. They were slightly disappointing. I'm not going to go over the numbers. You can read the numbers for yourself. Just know that the stock had a cross up here at 119 on December 30th. So essentially, I think it was Friday. 119.95 was the cross up. I still wouldn't buy it. Still wouldn't buy it. And the reason I wouldn't buy it is if we go to this daily, I think you've got another gap down here. And we're going to go all the way back. I think it'll bring us back. Yes. There's this gap right here between 83 and 84. And I think you've got that in your spectrum right now. I think that, to me, while we passed this one gap, which nobody thought we could get to, which was between 137 and 140, up here at 190 and 200, nobody thought that we would get down to 140. Well, if you get down to 140, oh my God, that's great. We are at 116 right now, and it's still expensive. I still think that this is a great long-term buy at this price. The problem that you have, if you go over here to Tesla, and Phil LeBeau this morning brought up a great point. I didn't even think about this. But Tesla was giving a $7,500 rebate off of their price. It wasn't a federal rebate. This was $7,500 that Tesla was giving back. Tesla wasn't expected to face a quote-unquote demand problem for quite a while. Well, the $7,500 price give back, that's a demand problem. And so it worries me a little bit about the demand for this car. For the Model Y, for the Model 3. If you haven't been reading about it, the Model Y may not qualify for the tax incentive, the $7,500. The Model 3 should. It is confusing as F. And the IRS is supposed to put out their numbers in their specific numbers in March. If for some reason, again, the Model Y is the most American-made SUV in existence right now because it's all made here. They do make some in China. They do make some in Europe, but they don't ship them from there to here. They make all of their Model Ys in Texas and in Fremont. So you've got the majority coming out of Texas, and Texas is expanding their deliveries. So I would expect it, if it comes under that $7,500 rebate, I would expect demand to be back for this one. And I would expect this to jump back above the 120 mark. You can see a volume shelf here right at 130. I think that's a pretty good level. It's kind of positioning off here. I think if you can get this below 110, I think you grab it. But I don't think that you adjust your position size. Don't go in big. Until you see that above this 9-day, do not go in big. You can clearly see, look, it ain't above that 9-day right there. We'll move in a little closer so you can see it. Look, since November, December 2nd, you had it a little bit above the 9-day, but you've been on the downside of that 9-day the entire time. There's no reason to get into this. None whatsoever. Another news update that'll bring that hits home for me personally is Apple. Apple has identified to some suppliers to slow down deliveries just based on a softening in demand. You did have a cross up on Friday at 128.33. I sold personally at 130, my first ever Apple stock sale. I sold it to take some profits just because it was easier for me just to sell the Apple because it was, I think my average purchase price was around $5 on that one. So it was a significant profit taking for me. And that's all that was. That wasn't that I don't believe that this one's coming back up here to 150. That doesn't mean that I don't think that this will be a good stock to hold for the future. I do see that MACD is super low. The RSI is down at 40. Probably still wouldn't get in. If we're heading into a recession and Apple's saying that they've got some suppliers that are cutting some of their deliveries, I think you take that with what it's worth. I think we're going to see a revision in some earnings. Their earnings are coming up January 26th. There was, if you go on Twitter, I looked for news of this. I couldn't find it. Google is supposedly on red alert in regards to ChatGPT. And if you haven't used ChatGPT, I would suggest you try it. They're supposedly on red alert for this. I don't know 100%. Oh, let me just redo this one. I don't know 100% what the red alert was really about, but it seems they think that ChatGPT could cut into their search business. And if ChatGPT cuts into their search business, that's the bread and butter for Google. So you're in danger of losing the bread and butter for Google because all of their other platforms don't make them money. That means the 17 PE that is currently on Google could be at risk. I'm going to pause this because my TrendSpider's messing up a little bit. Let's see. Maybe I have to log out and log back in. Let me log out and log back in. Log out. And we'll log back in. Boom, 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 boom. Shell is up. BP is up. Okay, we're going to look at that. There we go. Run. An error has been detected in your test criteria. What? My test criteria is perfect. Okay. Sorry, I had to delay that. Pause it just because TrendSpider was giving me a problem. I logged out and logged back in. You had a buy-in here at 88. You're trading at 90. You are up 2% today. That red alert probably got some people's attention. I still say if you can get this with an 80 price, an 8 handle, it's fantastic. You're just covering this gap back up to 91. There's also a gap here at 93. You're probably going to cover that. You're probably coming back to your 100 level. I think this is a great, great long-term buy. Coke and Pepsi. If you didn't read it, there was an insider that had done some lobbying for Coke and Pepsi with the sugar industry and taxing sugar and making sure that Coke and Pepsi were included in the food stamp program. Also making sure that some of the FDA said that sugary drinks are the best calories, the cheapest calories to get, blah, blah, blah. It's a long Twitter feed, and if you go to Bill Ackman's Twitter, you can read about it. He's all of a sudden on a campaign against Coke and Pepsi. He says he doesn't have positions short or long. He does have positions in restaurants, so I don't know if he's necessarily looking at something. I think the guy, Bill Ackman is the guy, if you don't know. He came on during COVID and said all hell is about to break loose, and it was realized that he had some short positions in the market, and that was during COVID. But with Coke, I did sell out a good portion of my Coke, and the only reason was we're at 52-week highs. I'm going to buy back closer to 60. If it gets down here to its 200-day at about 60, I'm going to buy back in. If it gets down to cover this gap down here at about 56, I'll definitely be buying back in. I have no worries whatsoever. I am a Coke and Pepsi lover. I like Pepsi over Coke, but it's the same chart. I mean, essentially, it's the same kind of quote-unquote business. If you're looking to buy one today, I'd probably buy Coke over Pepsi. But Pepsi's, just because Coke's chart looks better. But you can look up Bill Ackman. Both of these are in the core portfolio for my daily stock picks, and both of them are in my personal portfolio. I believe in both of them. XLF is an interesting one. This web page is taking up a significant amount of your Mac resources. XLF is one that had a buy up here at 33.92. This is the sector spider for the financials. And you just crossed this gap. You've got a little bit of this gap has already been covered up to 34.67, about 35. You're on the upside of the 9-day. This would indicate to me that Bank of America might be a buy. It's up 2% today. Wells Fargo, which I'm in, is up. What's Wells Fargo? Let me see real quick. Brokerage holdings. I have Wells Fargo. It's up 1.84% again today. I think these are starting to make their move up. Financials are starting to make their move up. Pick whichever one you want. Bank of America, Wells Fargo, Citigroup, or should I say Shitty Group for all you South Park fans. Shitty Group is a buy at 44. You're at 46. So you made your 5% off of this one. Great move on this one. Their earnings are coming up January 12th. I did notice that XLF had pretty good moves, so I was looking at financials. I don't know the news around it, but it was interesting. Let's take a look at Shopify, because I was looking at this chart. Now, mind you, Shopify is an expensive stock. It had a buy-in here at 34.32. I still own a significant amount of this in my retirement account. So it's not a taxable account. So if I sell it, I think for like a 60% loss, 70% loss, somewhere around there. We're talking $30,000 worth, which I had a gain on, wasn't smart enough to sell, held on to it. But it's gotten a move up here. And it's up 4.81%. I still hold this one today at 36. I like it. It just crossed that 9-day, and it gave some pretty positive move. The RSI is only down at 54, and the MACD's crossing up. Their earnings are coming up February 14th. The question really isn't, hey, is February 14th going to make the needle move? The question is, as we're in January, and some people want took tax loss harvesting and maybe are looking at some of these big movers to really make another move. Could this one get back to the 40 level? I think you could. I mean, look at that 50-day kind of rounding out. Look at the 9-day and the 21-day moving up. It used the 200-day as a support level right at 33. You're at 36, so it's a little bit more expensive. I would have liked to see you get in at that 34, 32, or maybe a 35 handle. Because I do think the downside, there is a significant downside. Say some bad news comes out, you've got significant downside. But I wanted to bring this one specifically up because I do own it. And I have not sold. I will probably dollar cost average and maybe look at this one because it does move quite a bit. And I can take the money out. In an IRA, maybe I take a loss. It feels bad, but it's really just getting me capital dollars to try and move in and out of a stock and make a little bit more money. And that's what I do in retirement account with losses is, okay, what's my best opportunity to make money? I don't just hold in order to hold in my retirement account. I look at it, okay, it's down. The algorithm loses you 55% on this. Buying and holding has lost you 68% on this. Your average win on this is 10%. You win 32% of the time. So if you can pick one of these big, 21%, 4%, 6%, 5%, if you can pick one of these big movers, your downside, your average loss is only 7%. So if you can pick the winners out of those, maybe you're a little bit better than me. But I do like the stock because it does move quite a bit. Let's look at some of our energy. Oil is down. Like I said, natural gas is down. So energy is probably not looking that good. And if you've been watching Puru's Twitter account, he kind of brings up that, hey, gas is under $3, but the XLE is at 52-week highs, close to it. COP, ConocoPhillips, 114.75 was the buy. You're at 117. It's kind of capitulating. The Bollinger Bands have been cinching up. Where's it going to go? I don't know. Looks like it's got slight confirmation, but that 50-day is coming damn close to that 200-day with that death cross. If it does death cross, what happened the last time it death crossed? It came down here. Looks like it was at 99, came all the way down to about 88. So 10% move? But then you shot way back up. I would consider that to be probably the best indicator of what's going to happen with ConocoPhillips or energy. If we take a look at the next energy, Devon Energy. This one has a 7% dividend. I think my average purchase price is 53 on this. I said anything under 60, you should buy it. 59.39 was the trigger on December 20th. Since then, you've just kind of capitulated forward. You haven't really moved. It's on the downside of the 9-day. You had this death cross right here at December 14th. You've had other death crosses, and then you go back up. So I do think that Devon Energy is probably a decent one to hold. Warren Buffett, Oxy. This one, I said anything under 60, you buy it. It's at 62. I don't think that's too expensive. The algorithm still has you in from a $64 buy. It's just been capitulating. Warren Buffett buys it and holds it. I'm going to buy and hold it. Oxy it was the number one stock and the number one stock of last year. XOM, Exxon. I sold a good portion of this just because it was at 52-week highs. I sold it at 110. You got this gap up here between 112 and 113. You got their earnings coming up on January 31st. Is it 30th or 30th? January 30th. So I'm not selling out of my position. I'm looking to add to my position. This one, probably, if it's got any downside, it's going to go only down to 102, which is the 200-day. I would expect it there. They're calling for $5 a gallon prices around springtime again. You think that's not going to move this stuff up? That's what we're seeing is that it's probably going to move up towards there. Chevron, you got a supply problem. By the way, when China completely opens up, you got to have a major supply problem with oil. And that's going to drive the price up. Chevron, I say anything around 160 is a better price. 170, a little bit expensive. Fang is one. This is Diamondback Energy. This one has a huge dividend as well, I believe. 136 was the buy-in. You're trading at 135. It's below its 200-day. It's kind of capitulating there. You do have this gap, which kind of comes into play, and I've said, hey, it's a little bit nervous. I probably wouldn't buy into this one right now just because that gap is down there. Their earnings are coming up February 21st. PXD, which has an enormous dividend. Pioneer Natural Resources. This one's kind of come down as well. 227 was the buy-in. You're trading right at 227.92. You have this gap, which has been covered down to 218. I think you get back above the 200-day, which is 240, which is a 10% move. I think this one's they just had their ex-dividend date. You've got earnings coming up February 15th. We can look at Viper, which I always call Venom because of the symbol VNOM, and I always mess this one up. But $31.78 was the buy-in. You're at $30.72. Again, you're hovering around this 200-day. You are below the 200-day, and I think this gap comes into play around 29, 28.88 to 29.88, in that neighborhood. I think that gap does come into play. You've already covered this gap. See down here, you covered that gap. So the gaps down below are significantly covered. Nothing that I'm necessarily worried about. We do have some folks in REI, and I went over a little bit more extensive look at REI, but you're up above the 9-day. I don't think I'd necessarily get out of this one, but oil weakness does hurt it. You do have if you got a hint in here at around 220 and you're at 240, I might take some profits. There's some debt issues here. And so you do have a high RSI at 56, and the MACD is just kind of hovering. Doesn't look like it's necessarily getting a button hook, but with the price in oil, you could see a button hook. Let's go over some scans. And I got a lot of scans. QCLN, which is my particular ETF that has clean energy, just had a cross up here at 47.15. You're trading at 46.98. It's down 0.3% today. I do think that this one has been beaten up enough so that you're looking at a pretty good opportunity down here with the RSI at 34. I might add more to this. I have this in a retirement account. I may actually trade this one. It's been a good one to me. And again, it's clean energy. Taiwan Semiconductor, I brought this one up, I think on Friday, but 74.29. Their earnings are coming up January 13th. That RSI it's not super low. It's in no man's land at 46, but the MACD is kind of down there. You've seen since Warren Buffett announced that he bought it right back here on November 15th, the volume's kind of come down to about the normal level. I would expect them to hover probably between 65 and 80, probably for the rest of the year. But I don't think you're looking at one that will completely crash down to the 30 level. Buffett buys it. I got to believe in it. Morgan Stanley, personal holding here. It is up 0.73. 85.02 is the price that it just crossed. I'd probably buy Wells Fargo or Bank of America before I'd buy this one. This one's kind of using the 200-day as its support level, but you do have this gap down here to 84. So you're trading at 85 right now. I'd be a little bit worried of that gap. Their earnings are coming up January 13th. No real reason to get into it. We talked about Apple having a cross up at 128. It's trading right now at 127. I wouldn't expect this one to kind of blow anybody out of the water over until their earnings come up. Their earnings probably with a revision January 26th. Between now and January 26th, I'm not necessarily looking to get into it, but you can see how beaten up it has been. But if you look at a weekly chart of this, we'll pull up a weekly. I think TrendSpider put up their weekly charts, and it's the last one to fall of the fangs. And your 200 days at 115. I would say that would be a kind of bottoming. If it breaks the 200-day on the weekly, I'd be shocked, because the only time it even came close was the 2018 crash. And you can see, and the only reason it did this is because it was so high flying for the previous year. And it just came way down from October all the way down to December. And then you just saw it shoot up. Even COVID, February, it was at 77. It traded all the way down to 55. And then it just shot up because people were just buying stuff. And so this pullback isn't crazy. I do think that you can see here, if we go back to, I'll touch 3 points right here. You're going to touch 3 points right there. So 127, kind of a bottoming point, I think. If you do break it, I think you've got your support level back there at the 200-day. I'm looking for my volume level, which should be somewhere around here. It might be back. Yeah, there it is. Let's pull the volume level. We don't want it back that far. We want it back here. And let's look at some of the volume levels here on the weekly. You can see there's a good volume level up here at 140, 150. Most people are holding there. And that's all the way from April of this year. So 150 seems to be a pretty good support. Amazon had a cross up. I bring this up because, and I've missed the A. I'm a fan. It's expensive. Don't get me wrong. It's super expensive. $83.12 was the price. And this was, on Friday. $83.12 was the price. Today you're trading at $85.79. You're up 2%. I just think it's been beaten up too much. I think there's a trading opportunity there. But again, you've had trading opportunities in this one and you've missed out on it. Teladoc, $23.65. I'm not a huge fan. I got this one from the ARC scans because ARC loves Teladoc. Kathy Woods just loves Teladoc. Me, I don't think it's that great of a business to be in, to be honest with you. One of the ARC funds, ARC-G. Remember, I sold out of all my ARC funds. I sold out in my retirement and my healthcare savings fund. Earlier in the year, I sold completely out of my taxed accounts here in December. $28.23 is the price on ARC-G. Genomics, I know nothing about. This is one where I would defer to Kathy Woods completely on that one. MGM, which is MGM Resorts, which will probably get a bounce from China reopening with Macau and things of that sort. $33.52 is the buy on the algorithm. And it's got a pretty good MACD cross-up is what it looks like. The last time it kind of crossed up here, you went from $30.66 to $33.60. So you had your 10% move. 33 to 36 is not a huge jump in this one. If it's using that 200-day and crosses that 200-day, which is right now at 34.17, I might wait until the 34.17 till that price kind of holds on either a morning candle or an afternoon candle or even a daily candle, and then see where it goes. Your earnings your catalyst is February 8th for earnings, but if China announces, hey, we've got a bunch of, we've cured COVID, they're going to see a huge one. Let me bring up Penn since we're on casinos. Penn had a cross up here at 29.70. You're trading at 29.56. You're well below the 200-day. This one probably has more problems than MGM. It's probably more of a risk, but you'll probably get rewarded a little bit better. If you are rewarded, you could get hurt more. Do your due diligence on that one. Datadog, which is a hugely expensive stock, had a cross up. This one has been nothing but poor. The algorithm loses you 43%. Buying and holding loses you 20%. So you're actually better off just buying and holding this one. You have 33 positions, 27% are wins. Your average win is 12%. So I'd probably not necessarily trade this one. I'd probably just buy it. And there's an interesting one that I want to bring up, 3M. They have some lawsuit issues. And so I was looking at more of a long term on this one and going back to COVID. If you bring up a weekly chart on this one and you go back to COVID, their COVID low price was 114. They're trading at 120 right now. Just a few weeks ago, well, I should say a few months ago in October, they were below that COVID price. It's got to do with mainly lawsuits and some of their exposure to fines and things of that sort. That's where you're having a problem. If you pull this volume shelf back here to say, and I hate pulling it back this far, but July, you can clearly see that we're down. There's a significant volume shelves here at 119 to 130. That 120 level is pretty solid. So if it goes under that 120, and again, this right here, you see that those volume spikes, that's around the lawsuit time in September, and it's just continued to perform just horribly. So there's your stock crosses. I think that's it for today. I am going to do a little bit more research into the bond stuff that I brought up last week and look at it. Just right now, looking Apple's down 2% at 126. Devon is down at 2% at 60. Coke is down 1%. Oxy is down 1%. Pepsi's down 1%. PayPal is up 3%. Square is up 3%. Your financials are taking a good chunk. And Wells Fargo, even my Wells Fargo is up 0.75. Bank of America, we can look at some of the core holdings. Amazon is up 1.75. Google up 1.63. I would wait for Google. It's at $90.20. I'd wait for the 8 handle on that one, 89. Somewhere in that neighborhood. You'll hit it today. Coke is down 1%. Oxy is down 1%. Pepsi's down 1%. QCLN is down 1%. I like QCLM. Qualcomm is down 1% at 108. I can't believe that one's down that far. Roblox, which we talked about getting out of, and then seeing a shoot back up. Roblox at 26.61, you're at 28. This one had a cross up here at 26.61. And I do think that you've still got this gap in sight all the way up to 32. Would I buy it now? Probably not. Your RSI is kind of trailing down at 49.71. I think you're probably safe buying it and holding it, but their earnings are coming up on February 14th. They did have a reduction in users that they announced, so you're a little bit behind the 8 ball on that one. Tesla's down 10% at 111. There's no reason to get into this one. Like I said, I think if you get down into the 80, if you get down under 100, I think you start nibbling. But there's no reason to get into this one. None. I sold out of my Tesla. I'm completely out. Just so you know, I took a profit on that one. Small profit, smaller than I would have liked. United Health. Oh, one that I wanted to bring up is Costco. Costco is kind of capitulating. You had a buy-in here at 458. You're at 454. Their earnings are coming up in March 2nd. So you don't have a catalyst here for quite a while. But if they announce for some reason, because of inflation, hey, it's the new year, we're not taking our hot dogs up. But what we are going to do is we're going to do a membership increase. Now, this one could see a pop. So I like the gaps above. Let's put it that way. I like the gaps above this one. If we do go into a recession, Costco is not a horrible thing because you've got gas at lower prices. If you go to Costco and look at their gas lines, it's always crazy. If you go to Sam's Club, you can get your Walmart stock as well for a kind of recession play. Let's look at Costco. Costco's PE is 34. It's pretty rich. Look at Walmart. You're at 43. In comparison, Target is at 20. So even at 151. Take your pick what you want to invest in. If you have any questions, hit me up on the socials. I'm going to hang out on YouTube. I'm going to trade in my Webull account maybe later. So maybe a couple of plays. If you have any questions, let me know. Take care. See you tomorrow. Okay, export song to disk. And my desktop is a mess, by the way. Okay, how'd I do? By the way, I'm so glad that I got out of Tesla. I only wish, what's interesting about Tesla, let me show you. I only got out to tax loss harvest, and it was to take a gain, so I can always get back into Tesla, no problem. But God, I mean, here in December at 188, I wish I would have sold there. You've just, I mean, shit, 188 down to 120, 110? God, that's crazy. Thanks, James. I think I do better on stocks than I do on the fire stuff. Because I got to be more organized on the fire stuff. I'm going to put in, let's do title. Oh, and by the way, exclusive for you guys. The Fire podcast, you'll notice in the middle of the Fire podcast that I did, if you watch it on YouTube, there's some stock footage that I threw in. The reason is the dog's interrupted, and for some reason, it did not record the video. So I threw in stock footage. It seems kind of cool. I mean, let's look. I'll show you. I can look at me live. State of the market. Oh, is he live too? No, that's 3 weeks ago. Subscriptions. Do I even show up? No, I guess not. Home. Seinfeld bloopers. No, I don't want to do that. History. The Mariah Carey, You Made Me Cry. Oh, here we go. This is the, I'll show you. I'm going to mute this. How do I mute this? There we go. I'll mute that. So here, coming up here, this is what's interesting. So I was doing this calculator to figure out, and then all of a sudden it just cut off. So, yeah, and I'm wearing the same shirt as I was yesterday. It's called pajamas, people. Pajamas. So yeah, the stock footage actually works in pretty well, which I might start using more of. I like it to go over a podcast. So in fact, boom, we're going to hit the like button. If you guys want, it's Fire with Gary is the, I'll put it in here. There's the, subscribe to that one. Hit the subscription. I'm going to do essentially what the first episode was, hey, what's your fire number? And how do you find that out? And it's pretty simple. I mean, I'll give you the gist of it. You can listen to the 18 minutes. I found my number, the way I always calculate it, and I didn't know that the fire community was out there. The way I always calculate it was I need to make $80,000 a year. So my bare minimum that I want to have as quote unquote my nut in the stock market is $800,000. And that's $800,000 in brokerage. That doesn't include, for me particularly, it did not include retirement, because the goal is to make it from now to retirement. I don't want to pay fees. I don't want to pay anything. So $800,000 was going to provide me minimum. I could make $80,000 a year in my mind based on the stock market on a 10% return, because that's what I've averaged over the years. So over the years, I always said, okay, if I want to make $80,000, I need $800,000. And I need that in a core portfolio, a brokerage portfolio. And I knew the reason why I said $80,000 was I knew from taxes I would pay 15% on long-term capital gains. So I was paying less than income taxes. I didn't necessarily need a lot to live on. I do have quite a hefty mortgage on this place, which is at a low interest rate traditionally. So I was doing pretty well. But that's the cover. If you want to use a calculator, calculators basically let you whittle down to a significantly better number. There's also ways of calculating your fire number by taking your yearly expenses and timesing it by 25. And that's the number that you need to have your fire number. My goal of that podcast was, hey, you have multiple fire numbers to actually come up with. But the first step is to actually come up with that number so that you have a goal. Because you can't not have a goal. And so step one, find a goal. And then I'll figure out a step two. But I'm going completely off the top of my head, just so you guys know. There ain't no plan. It'll be out there on YouTube. Tune in. Subscribe so you can actually see. So, but yeah, hey, indices check. Let's check our portfolios, folks. What happened to critically injured player Damar Hamlin? A University of Maryland medical systems cardiologist explains. Well, his fucking heart stopped. That's what happened to him, poor guy. I haven't read updates, but I'm just glad he's alive, by the way. Knowing a few people who have gotten to cardiac arrest and the outcome wasn't as positive, you can figure that out. It's a dangerous situation. I am down 1.2%. What's the indices down? I'm not even close to that. It's Apple. What's Apple down? 2.82. That's why I'm down 1%. Apple's driving me lower. Am I worried? Nah. Look at this chart. If I didn't have shit. You know, I have a bunch of money. I may buy more Apple here. 126. Let me see though. Look at a long-term Apple. It did just have that cross. Okay, so let's do this. Here's the low at 2018. We're going to go the low there. So you broke this trend. So you broke that trend. That's what TrendSpider was talking about. You broke this trend in Apple. And how much lower do you go? But here, let's move this to pandemic. And this isn't a good indication, but if we look at the pandemic from this point forward, most people, if we break 109, you got a big volume gap there. I mean, just if you break 109, God forbid. Does Apple go back? Here's what would be a nightmare scenario for me. Does Apple go back to its cover this gap right before as the pandemic started between 78 and 76? Does Apple go back there? I'll be right back. Gotta blow my nose. Okay. Oh. Let's post this podcast. I'm going to move over to Active Trader Pro. And we're going to go. KOLD is losing. It's losing some momentum. It's up 12%. Let's go to we're gonna go to Anchor. Man, KOLD. I gotta redo That's interesting. I'll log out. Wow. Okay. Desktop. Upload. Gonna put in P coat. And we're gonna insert ad. There we go. Okay, who's got questions? I keep getting a bunch of people coming in and out, I think, on this one. I should start recording this. You know what? I'm going to record some shorts, I think. I'm going to look at these two. I forgot to bring up for Joe that he brought up a good point that Google should have been in my core portfolio. Oh. Oh, my friend, her dog has the lower, those circle bones. Jaw got stuck. The bone got stuck around their bottom jaw. Okay, where am I? Seven notifications. Okay, we're gonna go to. I don't think anybody posted in the. Let me get this episode up. Some people listen on their way to work. Most people listen on their way home from work, which kind of sucks in that I think it'd be better timely wise. It's always the problem with a podcast on stocks. It's why part of the reason why I don't mind having a 4-hour candle on the algorithm is because I think most people do. 1, 3. Oh, what'd you do? Oh, let's see. Spy. areas I didn't get started on. Actually, I didn't go over Procter and Gamble or Disney. By the way, if you don't know how to read candlesticks and you're watching my my charts here, learn how to read candlesticks. And KOLD has gained confirmation again. It hasn't moved much. I mean, this 1 minute chart shows you. Since it came up on pre-market, it hasn't moved a hell of a lot. But it's up 14% today. Whew. Okay. Where is link tree? Oh, come on. Bum, 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 bum. Nobody's talking, so I'm assuming you guys are either trading, busy, or something's going on. But I'm posting this, so let's go to $4 billion in Blackstone. Wow. Okay, bum bum bum. SPY, Oxy, XOM, CVX, FANG, PXD, REI, Shopify, KOLD, AAPL, Goog. And I don't agree. I think Pepsi tastes better, to be honest with you. I know I'm in Atlanta, but I do like Pepsi better than I like Coke. save that shit? And I already inserted ads, so motherfucker. Publish now. Damn it. Damn it, damn it, damn it. Bum, 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 bum. By the way, I don't thank people enough, but I had a subscriber over the weekend sign up. Well, I had several people sign up over the weekend for TrendSpider. One of them tipped me. And I thought that was incredibly generous. And I was super thankful. So, just nice. I mean, listen, you guys are generous. And I had somebody ask me, how much? I had somebody comment on the Fire podcast that I was an obvious scammer. And all I kept thinking was, what am I scamming? Because I don't charge anything. Tweet. Twitter. I don't charge a damn thing. I don't ask anybody for money. If you want to tip me, it's completely optional. I don't pass judgment. I am thankful that anybody actually is generous to me. But yeah. All I kept thinking when the guy, I deleted the comment and I blocked the dude, but I was like, he obviously doesn't listen. He doesn't, didn't listen to anything that I had posted. He just said, oh, this guy's scamming. Douche. I just don't, if you listened and I'm an obvious scammer, I'm fine. I mean, come on. I'm okay with that. But when you don't listen and you call somebody a scammer, and the guy had 2 subscribers, had been a member of YouTube since like 2003, but had 2 subscribers and just was a moron. Got under my skin. Oh, I do go over Mullen. I think I put that in there. PBR. I went over Amazon. LabVIEW. I think that's one of yours, James's. AMD. Qualcomm. I went over. Ford. We'll cover that. CS. XPEV. We'll get this out of there. And that'll be good. Okay. Boom, 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 boom. Tweet. 2 tweets. Okay. see something real quick. Man, I got some crypto scammers on my Fire pod. Okay. Okay, I'm swinging you back to Safari View. And I am going to take a look at Bank of America real quick because this is one I may want to get into. It's looking pretty freaking strong. Oh, but see, this is what worries me at 25. But it does seem to be putting in the support level. Here's a good one, though. Okay. Oh, you know what I promised somebody? I promised them I'd send them what my list is. Expand indicator list. Let's take a snapshot of this. Okay, and then where'd that screenshot go? That's the question. I just took a screenshot. Damn, this thing is. Oh, there we go. Okay. Let's see. We're going to copy. And then I think it was in. I think it was. Okay, let's see. Pasting from MacBook. The indicators on my charts. Okay. If anybody wants it, you know what? Maybe I'll just post this. Maybe I'll just post it on Twitter. It's not a super high security thing. Yeah, I'll send it over. Hey, Dawson, you want in Instagram, right? Or Twitter? There you are, Dawson. Paste. Boom. It's a little hard to read, but if you have two screens, like if you have your phone screen, you can kind of expand it. Oh, by the way, want to see my wrinkles? Boom. I don't like teeth, though. I do have good teeth. That's what I'm told. So, I like this chart, though. And I'm going to shrink it up again. Collapse. Actually, you know what? I'm going to dividends, earnings. I don't have current strategy on there. Properties. We're going to do that's interesting. Oh, I created that. That's what it is. So yeah, custom annotations. I did resistance, support. I'm going to remove this. Yes. And here's what we're going to do. First, I'm going to collapse this. I'm going to do the range. No, that's not remove all. We didn't touch enough lines. So we're going to touch 1, 2, 3. There we go. And 1. Um, and I like this. Let's do this. Share to Twitter. Remove. And we will run. Copy. We'll go back. Boom, boom. I don't know why these charts don't show up. Close. And this is what's interesting. This is what I'm going to do. We'll take this and tweet. Drag this. Hey, Matt. Dawson, I sent it over to you. Where's my Active Trader Pro? Let's go. You know what we're going to do? Let's go Motley Fool. You know what? I feel like sharing some secrets with you folks. We're going to go look at Motley Fool. Fool.com. Let's log in and see what these fuckers are saying. Let's see what these guys are recommending. I'm ready to start showing you guys the secrets of what goes on behind the scenes here. KOLD is still killing it. Oh, come on. None of these websites, by the way, like Safari. I need to get on the alerts. I don't get this at all. What is this? I don't know what that is. See, look at this. Nike, what we think now. Garmin, what we think now. Can Peloton's CEO save the company? Oh, I gotta tell you guys. I know I posted in the group that I ran for the first time, and my ankle is still healing from that run. It's my Achilles. But Netflix, bullish for Netflix. In fact, I'm going to go do one now. Instead of hanging out with you guys, I'm going to go do some yoga on Netflix. Fool is a dang. What's a dang? Let's go to Urban Dictionary. UrbanDictionary.com. Let's look up a dang. I don't see dang. Larry, I don't see dang. Fool's okay. I don't think they do anything wrong. I just think, just like every other service, I just think they take too much money for what they provide. I got a bunch of to-dos on my list that I've got to get to. Yeah, man, you must be rich, James. You and that bougie Peloton wife of yours. I did the Peloton hack. I haven't signed up for the app since I started traveling. I just don't use the Peloton app. I just don't. Okay. BlackBerry sell. Oh, they finally got to BlackBerry? Sell. BMW sell. Core Laboratories hold. Coupa Software is finally a sell. What are you guys, crazy? Stitch Fix hold. Skills hold. See? And I don't mind. Let's see. This is December 15th. It's not horrible. Just Fool is like ARC. They basically hang their hats on growth companies. Let's see. This was December 15th. Quest Diagnostics. DGX. So let's go back here. DGX. Because all these fuckers look at charts too, the way that, TrendSpider tells you to look at it. December 15th. Buy. So you traded at about 150. You're at 155 right now. iRobot's horrible. I've had 3 of them, I think. Earlier models, not recently. But so here's Quest Diagnostics. They recommended it at 150. It's at 155. And you're getting that button hook. Here's my algorithm. October 13th, Quest Diagnostics, 126. Do you want to pay $700 or just listen to my podcast? You know what? I should do a short like this. Kathy's dangerous. Yeah, I just got out of her stock. I don't think she's dangerous. I should do a short right now. You know what? Let's do a short. We're going to create a short. We're going to do a 60-second one. Okay. I'm on motleyfool.com. Buy Quest Diagnostics. It's December 15th. Go over here, my algorithm. December 15th, right here. You're selling at $150. Where did my algorithm recommend it? 126.72. What do you want to pay? $700 a year for Motley Fool or just listen to my podcast? Boy, man, the cameras just got all freaking fudged up. I'm on motleyfool.com. Buy Quest Diagnostics. It's December 15th. Go over here, my algorithm. December 15th, right here. You're selling at $150. Where did my algorithm recommend it? You know what? I gotta get this stuff out of the way. I'm gonna re-record this. What do you want to pay? Start over. Okay. I clean out my cameras. Oh, you know what I'm gonna do? I'm gonna just record it on the iPhone. There we go, the iPhone camera. I'm on motleyfool.com. Buy Quest Diagnostics. December 15th. Go over here, my algorithm. December 15th. We're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. My algorithm is better than Motley Fool. Okay, let's do that. That was better, I thought. And now for some reason, okay, start over. I'm on motleyfool.com. Buy Quest Diagnostics. December 15th. Go over here, my algorithm. December 15th. We're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. We're going to add some music to this too. I'm adding some Metro music. It's Metamorphosis. Here. Metamorphosis is the band name. Inner World. We're going to add that in. Motleyfool.com. Buy Quest Diagnostics. December 15th. Over here, my algorithm. December 15th. We're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. My algorithm is better than Motley Fool. I'm on motleyfool.com. Buy Quest Diagnostics. December 15th. Over here, my timing. Diagnostics. December 15th. Over here, my algorithm. December 15th. We're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. My algorithm is better than Motley Fool. I'm on motleyfool.com. My algorithm, December 15th, we're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. My algorithm is better than Motley Fool. I'm on over here. My algorithm, December 15th, we're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. My algorithm is $126.72. You're still running. Today. Okay. um, okay, done. Upload short. I uploaded the short. Let's see what that. It's processing. That shit is gonna be horrible, I'm sure. It ain't something that I would watch. I think every short that I'm doing is getting like 400 views, so it's not a lot. I think I have like 4 of them that get like 10,000 views. And then everybody screams, "He's a fraud, he's a fraud." I'm on motleyfool.com. Buy Quest Diagnostics. December 15th. Over here, my algorithm, December 15th, we're selling at $150 per share. 151 was the high, 149 was the low. Where did my algorithm recommend? On October 13th at 126.72. You're still running. Today you're at 155. My algorithm is better than Motley Fool. My algorithm is better than Motley Fool. Motley Fool makes, I think, somewhere in the neighborhood of $400 million a year. You know what's continuing to go up? Bank of America. You want to see one that's got a good run on it? Look at that. With volume, by the way, I would add on the outside of the Bollinger Bands. It's got to pull back. See, it's cinching up though. Tesla is the top spot, by the way, most active. God, you're at 110. You know what? Let's go back here. I'm gonna do a little. I think I already did it, but let's do a little Tesla analysis. Yeah, I need to do a better job, I think, James, of telling folks. No, I am not hopping in at 110. It's got no confirmation whatsoever. Patience. If I'm day trading, see, here's the other thing is Tesla options, from my understanding, are super expensive. So you don't even want to buy that. What I may do is buy the TSLQ. And I think you've gotten into the TSLI. But look, my algorithm, it's not quite getting you out right now. It's got the downturn, but it's not quite getting you out. And you're not outside the Bollinger Bands. See how the Bollinger Bands are still expanding? It's not even starting to come up. It's still moving down that bottom part of the Bollinger Band. There's no reason to get in here right now. You need patience to be able to stay out of this one. You could be falling. Again, I think, and the reason why I'm doing this is I'm going to send it to some friends. One of my friends, I don't know if you guys remember me telling the story, he's got all of his money back in Tesla. And so what I want to do is I want to go from here no, I think it's this line. This one. We're going to start here and move there. And then we're going to remove this one. Remove this segment annotation. I want this to go from there to there. Okay. This is gonna kill them, but You took a loss on REI? I thought you were up on REI. I don't know, Larry. I kind of agree with you. Um, Here's the problem I have with classifying Tesla as a car company now is that they've just started selling the mega packs to electric companies. It's a game changer, but it's not something that is, how should I say, uncopyable. So another battery manufacturer could copy them. What Tesla has, which they've learned, which other car companies, by the way, have not learned, is the battery management. And there's two reasons why I think Tesla is not just a car company. First, their charging network, which is huge, which I also think they can apply for reimbursement under the Build Back Better Act for a large number of their network if they open it up. The problem is people like me don't want them to open it up because it's super busy already. I think you're under appreciating Tesla's leadership when you get to understand electric cars, though. It's got no support back here. Yeah. There's a company, God, I gotta look it up. There's a company, I forget which one it is, but they're building a solid state battery. And solid state are denser, heavier, and slower to charge than lithium ion, but they last forever, is my understanding. If they can bring that cost down, bring the charging rate up, I think you've got a significant. Tesla's under 109, under 109 now. I'm gonna tweet this out. Tweet, and then we'll close this. And then I'm going to. Oh, what did I do? Twitter. Oh, I'm going to have have to go back and find that screenshot now. Mother ever. 2 of 2. Desktop screenshot at 11:13. Boom. Let's see if they provided any updates. No. I guess not. I don't know who's blaming T. Higgins for last night. I don't think anybody is. That's the worst, by the way, when you see these guys crying. Yeah, if you want to read, I'll tweet this out. This is the guy who had a cardiac arrest at Euro 2020. That's just bad. Okay, let's get back to stocks. Remove all annotations. Yes. Let's look at Target's up 1%. I think Target covers this gap, by the way. I think there's just too many gaps above for Target not to cover gaps. And I think, at some point during this year, we get back to this 212. James, man, QCLN. I'm telling you, green energy, QCLN. Fucking Zephin. Guy's got the life. He's got my algo though, so I don't think he needs to be on YouTube. He can do it all on his own, I think. YouTube verification code. Yeah, let me move you over here. Look, watch. See, I told you how Bank of America was trading at that top of the Bollinger Band? This is a 1-minute chart. Just lost it. Kind of going to take a break. It's down below the 9 and the 21. 9 just crossed the 21. Bottom of the Bollinger Band. On Active Trader Pro, just so you guys know, kind of when, I sent out that look at TrendSpider. Active Trader Pro here, I only have the volume chart down. I have the MACD and I have the RSI. Up here, I have Bollinger Bands. I have a volume by price. And I have the VWAP, which is that pink line. The yellow is a 21-day EMA. The green is a 9-day EMA. And the red is a 200-day. I don't have a 50-day. That's what I use to trade up there. And honestly, when I was doing trading big, I would have 4 charts. I would have a 1-minute, a 5-minute, a 30-minute, and a 60-minute. And that was day trading for me. And I'll probably get back to it, this year with shit. When's a good time to get into Apple? Today. I said that yesterday. I said that long before. let's look at the current state of Apple since it's down at 125. I mean, here's the thing. Take a look at, we'll zoom in a little bit. It doesn't have any confirmation right now. It's all sellers. All sellers. I'm not selling my lot. I don't think that it's justified. I think this is based on people panicking that we're heading into a recession, that people have bought what they wanted to over the pandemic. Shit. I'll tell you, you know what? My reinvestment, because I reinvest Apple, I'll tell you what my lots are. I'm pretty sure I got Apple at 170. Wow, I'm getting killed today too. All positions. Let's look at Apple. Tax lots. 11.8, 139. It doesn't look like I bought. I did. Acquired 2.822. 173.23. Acquired 5.10, 2022, 154. Acquired 8.9, 164. So I acquired, it's reinvestment of dividends. Just so, and here's the thing, and James, you're young enough that you'll probably be looking back in 40 years like this. What was this? This was 17 years ago, 2006. 17 years ago. My average purchase price for Apple was $2.48. That's up 4,947%. 13 years from now, I think you might be in the same situation. Doesn't feel good today, but Dawson, I'll tell you, I've got my iMac here, got my iPhone here, got my iMac or my iPad here. I've got my AirPods right over there. I have 5 Apple TVs in the house. The only reason, let me see. Can I show you this? We'll go here. Video capture device. No, I guess I can't show you. But I would show you. But the only reason I don't have an Apple TV on my TV here in the office is because it's hung up on the wall. And the Apple TV is a box. And I don't have a table underneath it. I don't have anything. So I got a stick. And it's a Roku stick. And I watch CNBC on it. I watch streaming movies in here. So everything else, every other place I have it. Yeah, exactly. Start your podcast soon. But honestly, James, here, let's go back to Motley Fool. Watch, you'll see. Let's look at their portfolio. Recommendations. How do I look at this even? Look at their recommendation. Dude, how do you recommend this stuff? HubSpot. 227% from 5 years. Trading Desk, 880% 5 years. can't see. The only reason I don't even know how to work this website. But the only reason Motley Fool came into existence was Netflix, Amazon, and all of those big movers. I got lucky in Apple. They got lucky in others, but okay. And with that, I am going to log off. I think you're going to see more downside in Apple. Honest to God, I think Dawson. I don't think there's ever a bad time to get into Apple, but remove all annotations. Yes. Remember you want a trend line. If I were to take a weekly look at Apple and we were to draw a trend line, and I think I did this, and I start here in 2018, okay? I've got to touch 3 points. We're going to touch right there. You're down below that quote-unquote support level from a weekly basis. You have never, since 2016, broken the 200-day line. The 200-day line is 115. In my mind, I think that's a support level for Apple. I don't think we're done going down at 125. I think 115 is probably the support level. But, are you going to go, here's your PE on Apple, 21. It has held up significantly better. Let's see if we can do a CNBC. We'll go to Apple, and I think we can do a comparison. New 52-week low today, of course. Let's do a comparison to Google, GOG, and we can do a 1 year. So the green is Google, down 37%. Apple's only down 30%. Let's do another comparison of Amazon. And Amazon is blue, down 50%. And Google's down 38%. I mean, if you want to look at Netflix, and again, these are the high flyers. Netflix is in red, down 51%. You want to look at Microsoft, which is another one. Let's get rid of Netflix, Amazon, and Microsoft's purple, down 28%. So, Apple's down 30%, Google's down 38%, and Microsoft's down 28%. The thought is that Microsoft and Apple just have to move more. So, I don't think, if I knew that Apple was going to go back to 150, I'd be loading up on it 100% right now. But I don't know when it's going to go to 150. Do I think that it's going to stay at 125? No. I think they'll, when their earnings come up, you're going to see a disappointment in their earnings, which is baked in. Remember what I always say. The fact, we're past Christmas, but the fact that your grandmother is going to cook meatloaf or chicken or turkey at Thanksgiving or Christmas, it's already baked into the market for next year. So it's already in there. They know what's going on. The market knows. Let's go to a 5-year. Microsoft is purple. The red is Microsoft is 170%. This is a 5-year. 170%. Apple's 186%. Google's 62%. 5 years. So, no, honest to God, I mean, I think Apple represents, I think it's 40% of my portfolio at this point. It's a lot. Do I mind adding to it? Probably. Let me put it to you this way. If I told you Apple's going to be at 150, do you have a problem buying it at 125, or do you want to wait to see if it goes to 115? I mean, that's the best way I can put it, Dawson. If you don't have it in your portfolio, add to it. Identify what you want Apple to be in your portfolio. If it gets too big, trim it. If it gets too small, add to it. Dollar cost average, either up or down. I don't mind holding it. I'm not looking at Apple on a day-to-day basis that, oh my God, I'm worried about it. But it does have to come down. Honest to God, you take a look at this chart. Just from pandemic levels. If we go down to pandemic levels, you're at about 50. Now, I don't think it's getting down there, but there is this gap down here at about 77. If we talk about it with Tesla, we might have to talk about it with Apple. That 77 price. I don't think that Apple makes too much money, unlike Tesla. Okay, there's somebody looking in my neighbor's nanny's car. That must be her daughter. That has to be her daughter. Yeah. I mean, Dawson, I can't guide you on to where to buy it, but I can guide you in that. I just don't think. I mean, look at the revenues. Let's look at the revenues. Earnings per share. Current ratio 0.9. Earnings per share, $6 per share they make in profit. Next year it's $6.77. Earnings per share next quarter $1.50. That's for a quarter. So for the whole year. Again, all of this stuff gets brought down and then, it readjusts. Nobody's shorting Apple, I don't think. I think some people are, but it doesn't have a great dividend. The book value is $3. So if you sold it off for its parts, it's $3. I mean, they just create too many good things. So, but, we always look at the 52-week range. You're 31% below your 52-week high of 182. You're at your 52-week low. So, you can look at this weekly chart. Look at the daily on FinViz. You can see there's the trend line. You're touching 3 points. It touches 3 points. And your trend line's up here at 135. Your weekly, I don't think you even have a trend line on the weekly. No. But monthly? Am I worried? Nah. We're taking a break. Look at that move on a monthly. And again, this is the 200-day. You haven't touched the 200-day on a monthly. If you come down to 108, you're touching the 200-day on that chart. So Costco's below 450. I said this on Friday. Costco, if it touches 430, load up the Brinks truck. Okay, and with that, it's 11:30. I got to go get my library card. I've been on here for 3 hours, I think. Yeah, 2 hours and change. Okay.